I'm Ian McIntosh, Managing Director of Strategic Offshore Research Limited, based in Aberdeen.
Today at the OSJ Subsea conference, you gave the opening presentation on the market fundamentals. Could you, for the camera, give us a brief explanation of how you see the subsea support vessel market currently?
The key things in the whole market are demand and supply have got closer and closer together. We came out of a period when the market was heavily oversupplied, and therefore trading conditions were poor, rates were poor, everybody was just struggling to find work. But since in the last 5 years, we have seen demand improve, but critically supply be reduced because vessels were scrapped, boats were sold to work in cable markets, go to the renewable side, left for whatever reason. So the supply has been quite well managed as demand has increased to create a very tight market with strong utilization, much higher rates. So far, we're quite protected from a new building boom because historically, the market, when it heats up, everybody wants to build a new ship, wants to capitalize on the market. And we're not seeing so much of that at the moment because prices are higher. The financing is harder to secure as well. Delivery times are longer as well. So supply is quite controlled. We do have some speculative new building, but it's at least 2 years away from coming out. And it may not even come to the market. The boats that are looking at working in wind farm market or walk to work or even just as a PSV. So they're trying to cover lots of different bases with some of these speculative boats. So they may never come to Subsea anyway. So market is pretty strong, quite well protected, uniquely different in that we do not have this impending new building wave that would weaken the market. So in pretty good shape all around, vessel owners, contractors back to making money, a point where they can almost harvest the market a bit. They do have a bit more pressure as well because if they're publicly quoted, shareholders expect dividends, they expect share buybacks, they want the money to come to them that way. So they're making money, it's harder for them to spend it because they also have to keep the shareholders very happy. And that's what all companies and the big contractors have been doing for decades anyway. So it's bringing the same pressures onto ship owners and smaller contractors as you see on the big boys in the market.
And where do you see the hotspots for demand for vessels going forward for the next 5 years?
Geographically or?
Geographically, yes.
Geographically, Brazil is really, really important. Norway has a lot of activity coming on new field developments. So those are critical areas. But you're also seeing a shift in the sort of vessels that clients expect to use on projects everywhere in the world. So you're seeing boats that are close to being North Sea class being involved in Middle East construction. You would never have seen that 10 years ago. Southeast Asia, again, they want to use better and better boats. So the quality of the tonnage working on projects, wherever it is, it has really increased because if you're a BP project manager that worked in the North Sea, you want the same quality of vessels if you're in Trinidad or anywhere. So that definitely raises the demand as well because the clients want the efficiency of the better boats, they can do more from them. So that helps the whole market balance as well.
Okay. And you also talked about emerging markets like decommissioning. Can you elaborate?
Yeah, so decommissioning has become really important to the market. Previously, it was one of those great prizes that was just beyond the horizon that you couldn't quite reach, just slightly out of your reach, on your fingertips. But it's actually emerged as a proper market on its own, particularly in the UK. The UK is slow on new construction work, but has a lot of decommissioning work coming up. Internationally, there is decommissioning work in Thailand. Brazil has seen a decent level of decommissioning start now as well. Some Mediterranean projects of Spain last year. So it's driven by North Sea with Brazil somewhere behind that. But it's not going away in the North Sea. It's reached a consistent level that happens every year with a lot of stuff to come out. So certainly for the next 6 or 7 years, there's a really strong decommissioning market because there's so many fields in the North Sea, the UK side of the North Sea, that are finished, that have to come out. And they're complex. There's lots of stuff on the seabed, platforms to take out, everything. So decommissioning is a very significant market. But there can be a price sensitivity there as well because it's not new production. It's not bringing an oil company more revenues. It's almost dead money. They're spending on something and they're not actually getting anything back in terms of revenues. So they can be price sensitive. They can delay those projects a bit as well. But regulation is forcing them to do quite a bit at the moment, and it's likely to stay that way. They're not going to let them just walk away and leave stuff been dealt with lying on the seabed. So that there's a consistency to decommissioning that we have never seen before. Year on year, proper demand from it.